Give it up for your boy. I know. Y'all probably like, of course, bro, gonna post whenever he win. For real. No, I'm just playing. But nah, hey, bro. I just been, like, if I show you my stats now, bro, I could you not. Like, I'm break even. Which actually technically means, not break even, I'm 50% win-lose. Which technically means I should be progressing. It's just, you know, market. You know, I can blame it on the market, quote unquote, all I want, bro. Man, it's really just me. I'm not trading as aggressively as I could, you know what I'm saying, for those profits. Like I did today, you know what I'm saying? Today was different because I just traded mad hard, and you even see it was literally a 1 to 1.9. And I made $1,600. You know what I'm saying? So I'm gonna kind of run y'all through the mental shift that I'm doing, the aggression shift that I'm doing, and then the trade I took today and why it was valid and how it was valid and all that. We really don't even need to look at ES for real. Hey, bro. Hey, my haircut. We're back. We're back, boys. We're back. I just got a hat because this hat is fire. I bet we low-key just gonna do pictures on some stuff because we just gonna do screenshots because, again, still, hey, if y'all got any suggestions, let me know, bro. But I still ain't found one that works good with my computer, bro. All right, but anyway, going into the day, on the 4-hour, the main thing that I just want y'all to look at is how this high right here was taken, right? That buy side liquidity got taken, and then we put in that big, large bearish candle right before. Yeah, so we took that high, and then we came down, had this big old candle, probably news, to be honest. There's some news. But yeah, so we took that high, and then we had this big candle down on the hourly time frame that had us have a change of the state. But here's why I was not bullish. I was bearish today, but here's why I wasn't bullish. Because we were going up into that 1 hour fair value gap. You know what I'm saying? We were going up into that 1 hour fair value gap. And so I'm like, all right, really what I want to see today is I want to see us fall back down. I want to see us respect the fair value gap. And initially I wanted to see us turtle soup this high right there. That high, right? Because that was the high of all the highs put in, and then it's come down. But that's not what ended up happening, and I'll kind of run y'all through what happened instead. So I was on a 1 minute chart most of the day today. I was on a 1 minute because I was expecting us to SMT with ES pretty much right at market open and start coming down. But we didn't do that. We started pumping, right? We started pumping. And something I learned about SMTs. SMTs are how we know whenever the market is about to go in the direction we predict, right? Or we have conviction that it's going to go. Now, the SMT is only valid with a change in the state of direction, okay? So just because the SMT is there, it is not technically valid until, you know, we start changing order flow, change the state of direction, we inverse a fair value gap, you know what I'm saying? Like, until we change order flow, that SMT is technically still not valid. You feel me? So we were putting in SMTs like all up in this range. We were putting up SMTs all up in this 1 minute range. But I was waiting for that change in the state of direction for me to like, okay, now I'm actually looking for something, right? So what we end up doing is once we finally get that change in direction after the SMT, I'm like, okay, with the change in direction, we have this order block. So those dotted candles, those dotted lines shows the order block. All right, that shows the order block from the high of that candle to the low of that candle. Okay, so I'm like, okay, we changed direction. I want to see us come out of this, and then I also want to see us go into that 1 minute fair value gap. There is something beautiful. There is something beautiful about fair value gaps that are inside order blocks. They are typical high bounce zones, meaning if price goes up into the order block, it may bounce, But if it goes into the order block and into the fair value gap, it's like way more probable that it's going to bounce, especially after it changes the state of direction, right? And on top of that, it was equilibrium of the range as well. It was equilibrium of that small break of or change of the state range. So I kid you not, I put my limit order right at the entrance to that fair value gap. And you can see kind of where I got in. I put my sell position in. And then I took low hanging fruit. That's what LHF stands for. Low hanging fruit, right? That's all we want. We don't want it to go all the way down to the bottom. And no, bro. We just want a piece of the pie. We don't want the whole pie. We just want to take a piece. And that's how we start racking in. You know, if you watch Justin Werland, right? He says that he's my mentor. So I'll say that too. But we just want a piece, bro. We don't want to take the whole freaking thing. And good thing we did, because look, we come and take that. We literally barely come down, and then we literally come right back up. Like, we come right back up. And so today's trade was order block, which SMT, right? It really, like, yes, we did take out that 1 minute high, but I don't really know how much that helped us, you know what I'm saying? SMT, changing the standard direction, right? It's making the SMT valid. Order block, fair value gap. That was our trade time. Nice and simple, nice and clean, nice and easy. Was this equilibrium of the range too? It might have been equilibrium of this range. Yep, it was. So I could have targeted equilibrium of the range, but I didn't. And that's really what I wanted to see. After seeing market pump until like literally until 9 o'clock, I really just wanted to see us rebalance that range so that we could continue higher if we wanted to, or, you know, fall all the way through. But I just wanted a piece of the pie. You know what I'm saying? So I took my low-hanging fruit, and I'm going to continue to take my low-hanging fruit unless I have confidence the market is going to go lower, and I just didn't have that confidence today. Now, as far as the mental shift goes, here's kind of what I'm changing in my psychology. What I'm starting to do is walk myself through what I want to see before I enter, right? So if I see SMT, instead of just being like, SMT, ooh, fair value gap, and then enter. What I'm doing instead is, all right, SMT. Now I want to see a change in the state. We're going to wait. We're not going to do nothing until it's changed the state. Fair value gap gets tapped into. Nope, I didn't see change the state. Then a change in the state comes. All right, now I want to see us rebalance into a confluence, right? I want to see us rebalance into a confluence to gain liquidity to continue further in the direction I think it's going to, right? So once we broke, so today's example, SMT, all right, bet, I want to wait for a change in the state direction. Change the state. All right, I want us to rebalance into the order block and the fair value gap. As soon as we hit that fair value gap, I got in my position and I targeted low-hanging fruit. So it's walking myself through the trade rather than just being like, oh, this looks good, yeah. There's a fair value gap, and then clicking. Like, no, like, this kind of removes that emotional aspect of it. If you already have predetermined what you want to see and you refuse to enter unless you see it, right? Now, obviously, there is some emotional wiggle room, right? Because you could be like, I want to wait for the SMT to have a change in the state. Oh, but that fair value gap just got tapped into and you enter anyway. You know what I'm saying? It does still require you to discipline yourself and force yourself not to enter. But, I mean, today's a perfect example of why we shouldn't do that. You know what I'm saying? I walked myself through it. I was waiting. I was patient. I entered, came into a little bit of drawdown, but my strategy played out. You know what I'm saying? My stop-loss plan played out. Everything played out. And we hit full TP. Now, as far as aggression goes, I have one past eval. And that's actually or I have one express account. So it's passed. And then I have two accounts with stop step. I have three now. What the mess? I have 3 accounts with top step. Oh my gosh. I have 3 accounts with top step. I have 1 passed, 2 that are in eval, and then I have 2 Apex accounts. They're all 50Ks. The Apex accounts are up 1,300. My personal account is break even. And then one of the combines is, I just got it today. And then the other one is up 700. I'm going to continue to trade it exactly how I've been trading it. My Apex accounts, I don't care about them that much. They're so cheap. They were like $20. And so I'm just going to trade those. I'm going to keep, and I'm already up a rack. So I'm going to just trade them mad aggressive and just, if I lose them, I lose them. I don't care. As far as my Top Step account, my live one, I'm gonna keep trading it with one contract. That's what I trade. I just trade one contract every single day. I just trade one contract every day with a max loss of 500. So I think I'm gonna just keep that same risk. That's pretty good risk. And we're out of August now. We're transitioning into September. I would say we're still transitioning into September. So I expect to see some more volatile price action. And so hopefully we can catch bigger, longer trades, right? Because I remember earlier in the year, I'm catching 900-point moves and 700-point moves, but we're not doing that. Today was a what? Freaking 164-point move. You know what I'm saying? So I'm expecting us to see some better price action, some more volatile price action. So I'm gonna just keep with the one con for now. And as price action gets better, the trades will also get bigger. You know what I'm saying? So anyway, yeah, that was my trade today. Super simple. 1 minute SMT, 1 minute change of the state, 1 minute order block plus the fair value gap, and a limit order at the fair value gap. Now, mind you, I'm trading on the 1 minute because I've been back testing, and I'm starting to gauge price action by just the 1 minute. Like, I'm starting to gauge it a little bit. I'm still looking at the higher time frames and like seeing like, oh dang, are we going against any higher time frame stuff right now? You know what I'm saying? But as far as what I'm really looking at the 1 minute to get the best risk, the best entry, you know what I'm saying, and kind of gauge what price is trying to do here. And so, but yeah, 1 minute SMT, changing the state, order block, fair value gap, and I guess we could say equilibrium too. And then targeting low hanging fruit, and then our stop loss was above this SMT high. I could have put it above the fair value gap high, but I was okay with giving it more room because 86 points isn't even 500 on one. It's 430. So I was willing to put it a little bit higher and give it some more room. But yeah, y'all, I'm only gonna post on days where I want to record a strat video, a Bible video, or I want to do a trade recap. You know what I'm saying? And I'm gonna start putting together, not promising anytime soon, but I'm gonna start putting together a strat video as I continue to test out my new way of thinking and entering the market, and as I continue to test this simplistic style of trading. You know what I'm saying? Just looking for real basic stuff and not all the weird, whatever it is. So yeah, y'all. Hey, this is this, that is that. Christ is Lord, Christ is Lord, Christ is Lord. And I'll see y'all boys later. Deuces.